Let's look at a Chinese railway company. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Here is the Dividend stock thematic portfolio. So we do have the railroad company here, Guangshen Railway. 8% here from the low. We have been through a minus 19-ish percent pullback. I did find, their annual report, so I think that we can just quickly get, some info about, what the company is. So established 6th of March 1996. Company is a joint stock limited company engaged in railway passenger and freight transportation and related services, and it's registered in Shenzhen, People's Republic of China. Guangshen Railway, which is under the independent and autonomous operation by the company, is 147 kilometers long and traverses the Pearl River Delta in Guangdong Province, a region of rapid economic growth. Okay, so here is the chart. Big picture, weekly data points. I did draw in these time cycles, and we have to take them with a grain of salt, of course. The time cycle does, however, suggest that it's a possibility that we are approaching the end of the declining phase. Hypothetically, purely hypothetically, of course, if we were to get up to this level here, that would be a 326-ish% move. We do have a very interesting situation in that we are forming something that looks a whole lot like a double bottom here. And you also have massive horizontal support over here. So this is definitively a level we expect to hold. It should hold. If the bulls are not able to show up here, then I'm not sure when they will show up. Maybe down here, but down there, that is quite far down. That would be, minus 47-ish%. The PPO is at a very low level. RSI is bouncing from a level that has triggered multiple rallies in the past. So this looks interesting from a more bullish perspective. This is speculating, of course, that we are forming a double bottom. Obviously, you do want to have a stop in place, given how far down we could go if this support level breaks. So if we measure here from the current price to the break of the double bottom, that would be a minus 9-ish% pullback. So I certainly wouldn't want to hold on to anything more than that. And this would be definitively like a wild card kind of investment, because this is trying to pick a bottom, which is always, of course, risky, but the biggest gains you will get is when you are a bit aggressive. Because, some people think that, trying to pick lows and highs, that is like really dangerous. But it's also dangerous. There's always danger in the market. So let's say that you instead want to wait until we have like a breakout above, a bunch of key moving averages. Then number one, you would be missing out on a hypothetical gain. So from this level to like a breakout, that would be like 14%. And from that level again, of course, it's fully possible to go down, which is very common actually after a big rally. There are these retracements. Okay, so looking here at the daily data points, it looks interesting from a bullish perspective. And the seasonality for the stock is extremely bullish over the last 5 years. For September, it closes higher 75% of the time, only a 1% gain. Obviously, that is not like impressive, but this is a dividend stock. Over the last 10 years, September and October look decent, even though it's been in a big downtrend. Over the last 20 years, September is one of the strongest months, even though, as we see here in the chart, things have been rough. We do not have data from Finwiz, unfortunately. That is because this is Sachs does not have much information about the company. 1 billion in market cap, low beta. The dividend, according to MarketBeat, is 4%. There is some talk that the company might be delisted, but it is still trading. It is, over the counter. There are pros and cons of investing in stocks that are, OTC. One benefit is that the people who buy OTC are more sophisticated. If you are like a beginner or even maybe a bit intermediate in the market, you are not necessarily going to bother with the over-the-counter stocks. So the benefit is that, you are trading along with, the more mature people in the room. Hence, the dynamics are different. I think that taking all the evidence together here, this is very interesting from a purely technical price level. You could benefit from price appreciation due to the double bottom, and you also have the long-term horizontal support. You do have the dividend. It is at a very low level, and as we did see here, there is some concerns that it might be delisted. I think that if it can find its footings here, then it will, stay on, because then, the price will likely go up, and because that is why, people take their company public, is that, they want to raise money. And obviously, it hasn't been, that successful here from Guangshen Railway company. One of the reasons why a company might decide to delist a stock is also because it is deeply undervalued. So any kind of talk of a stock getting delisted, that could be a very interesting sign that this is a good deal from a fundamental perspective. But yeah, the support level must hold, because if it breaks, then I do think that the listing could actually be a very real possibility. But yeah, this is one of the few ways to get exposure to some really deep serious infrastructure in China, and I think that is a very interesting opportunity. And yeah, I think that there are more reasons to be bullish than bearish for this company at this point.